Good morning. It is Saturday, February 28th, and we are going to monitor the situation today. So, US Israel joint strike on Iran. What does that mean for your portfolio for long-term investors, right? So, that's what Tony Capital is about. We want to know if there's anything. First of all, we want to monitor the situation, right? I got my Starbucks in my hand, if you can see this on video, but how do we monitor the situation at Rigatoni Capital headquarters? Well, we use Claude. Claude is our buddy. Claude generated a report this morning for me. I asked it to brief me and be accurate. What told Claude this morning was give me a Rigatoni briefing, but center this around everything I need to know about the US, Israel, Iran strikes. I need a very detailed report and timeline, and any visuals if you find it necessary. We'll want to share my screen with podcast viewers, so it will have to be accurate. It did it in like a second, really fast. So, I got my car to go to Starbucks to buy my cold brew. And I talked to Claude the entire way down the street and on the entire way back. So it was in my AirPods. It felt very futuristic. I did feel futuristic, but what I wanted to do was make sure everything they were giving me was accurate if I was going to be sharing it. So pretty much, it kind of like confirmed that it wasn't confusing the US or the Israel strikes back in June. If you recall, that is written right here. Timeline, June 2025. So it breaks down June 13th, the first war begins. Israel launches major strikes on Iran's nuclear facilities, and then on June, Trump strikes on the Tan nuclear facilities, and war ends after roughly around 12 days. On November 7th of 2025, Trump says Iran requested sanctions relief, signals openness to talk. December 2025, mass protests erupt in Iran, and it kind of breaks down going all the way into February 28th, which is this morning. So that was kind of cool. So you can kind of brief yourself on the situation, right? It gives you operation names, of course. So you can see this one is Operation Epic Fury, and Israel, I believe, is calling it Operation Shield of Judah. It gives you strike time. It confirmed who confirmed it. Well, Trump confirmed it probably on the morning. And yeah, so that was really cool. So anyway, I was talking to it on my AirPods, and I was like, I have Claude talking to me in English. I have British accent, and it just felt like I was living in the future. It was really cool. And, I was making sure, what was I saying? I was making sure it wasn't making mistakes, because that is the biggest problem with AI and these LLMs, right? So, make sure you're scanning the proper information. So it actually sent me a revision just to be careful. I believe this is the revision, hopefully, I'm showing you guys. So, you know, this is saying strike targets. So this is a 7-page document. So it gives you strike targets. It gives you there's already confirmation of Iran retaliatory strikes, and it's telling you where those strikes are occurring. Northern Israel, etc. Some air bases in Kuwait, looks like Qatar. So there are retaliatory strikes already, and it's only 10 a.m. here on the East Coast. And then we have Rigatoni Capital, the market impact as of 2 p.m. Eastern today. So, well, right now it's 10 a.m., I just said. So I guess it made a mistake there. It probably doesn't know where I am. It tells me Bitcoin dipped low. It dipped was $63,000 this morning. So that's interesting. I looked at it before I came on. I think we were at like 64. So it's pretty accurate here. It was actually almost 70,000 earlier this week. That doesn't sound right, but maybe we did get close to that. I remember seeing, I know it did well there for a day or two when, all the tech stocks came back for one day. It's breaking down, oil, gold, futures don't matter right now. It's too early. The 10-year treasury yield wouldn't look at that. VIX wouldn't look at right now because it's on a Saturday morning. Scenario analysis. So this is cool. It's giving you low probability scenarios on what will occur, but for some reason it's giving me a column that says what the market impact would be. So, I probably would change this around if I really wanted to make this better. I don't want to know what it thinks Bitcoin's going to do. That doesn't make sense to me. But, it's interesting that it did this. And of course, it wants to give you the information on the straight up news closure, what that does to oil, potentially what the price is going to be on oil. This doesn't look accurate to me. We would ask an expert on oil, of course, and regime collapse. Is this really, it sounds like they have hit some major, major politicians or whatever, military generals over there already. And then it tells you the bottom line for rigatoni capital. The single biggest risk to markets is not the war itself. Well, we know that because every time there is, these type of strikes, it ends up, if anything, the US stock market rallies on it, right? It dips overnight during futures and then it rallies. It says the single biggest risk to markets is not war itself, it's the Strait of. I would agree with that. Iran's navy is a stated U.S. target. If Iran mines or attacks that choke point before it is degraded, 20% of global oil supply is at risk. This is an inflation shock for the Fed. This is an inflation shock the Fed cannot cut rates through. And it is the scenario that turns a 5 to 10% equity correction into a bear market. Not sure about that. Bitcoin, yeah, it's really focusing on Bitcoin a lot. I think for good reason, because Bitcoin is the truth machine that trades 24/7. So I understand that, but I think if I were to revise this briefing, I would want it to be a little less focused on Bitcoin in this section. For the broader portfolio, defense stocks likely see another higher, benefits from sustained oil prices. Tech faces headwinds if oil-driven inflation keeps rates elevated. Gold is the cleanest beneficiary. Cash preserves optionality in a wide scenario environment. So, and then it says the key unknowns, and we're in the fog of war right now. So, it's to monitor the situation. It's kind of like a joke. Nobody's able to monitor the situation right now. So what I want to go to is my portfolio, which I did yesterday on this podcast. Lockheed Martin down here. It's at least my top 15th holding. I'm up 120% on this name. It's 2% of my portfolio. RTX Corporation, I'm up 144% on this position. It's 1.59% of my portfolio. I also own Northrop Grumman, so that must not be in my top 20, but look at this chart, Northrop. So I would say between Northrop, I also have L3 Harris. This is RTX's chart, just so you know, since oh, you guys can't see this if you're listening to it, darn it. So anyway, like RTX and Lockheed Martin, since I would say 2024, have been on a tear, they are just really hot stocks. And it's not just because Russia, Ukraine. I mean, this has evolved into a new trade. Let me think. Lockheed Martin, Northrop Grumman, LHX. I haven't looked at this stock. I know this L3 Harris sold off this week. I'm not sure why. And then it bounced right back. So look at that. People made a lot of money in a trade. I don't trade, but look at that. It traded all the way down to like 329 and now it's at 364 within less than 12 hours. So the whole point of me bringing up these defense manufacturers, what I'm trying to say is not trying to humble brag. I'm trying to say that you should have exposure to defense manufacturers in your portfolio. That's my opinion. That's how that's how I have my portfolio set up. So between Palantir, which I think we should count as a defense manufacturer. I think it's going to trade almost similarly in these situations only. So Palantir is a big position of mine, 4.13%. But between L3 Harris, RTX, and Lockheed Martin, that's probably like getting close to, what would you say, 5% of my portfolio. And then you add Palantir, which is 4% of my portfolio. Like my defense manufacturers are almost 10% of my portfolio at this point. So I've always had a nice exposure to defense. It's not because I'm pro-war. It's because I know war will always exist. So, monitor the situation. What would I recommend? I would monitor the situation through X, of course, but again, fog of war. So Walter Bloomberg is going crazy this morning. Zero Hedge is going crazy this morning. A lot of good information, a lot of good videos. But again, fog of war. I wanted to also show you what the Wall Street Journal is doing. They do these live, they do their version of like Zero Hedge. So they just put up the latest updates. You can click it if you have a Wall Street Journal subscription, and it's trying to break down, the breaking news stories based on just this situation. There was one that Marcus Weisgerber, can't say his name. The cost of the U.S. military buildup in the Middle East. This was 28 minutes ago, apparently. And it says repositioning U.S. military forces to the Middle East before U.S. and Israeli strikes began on Saturday is estimated to have cost taxpayers about $630 million. Atop moving more than a dozen ships and flying more than 100 aircraft to the region accounts for the bulk costs, McCusker said. It's likely that these costs incurred before the strike started could be absorbed by the Pentagon's $839 billion budget appropriation for fiscal 2026, she said. Now that strikes have begun, those costs will increase for account for warfare, aerial refueling and replacement of munitions. Pretty much, I read that because I just wanted you guys to know that, $630 million for taxpayers. Yeah, it sounds like a lot of money, but it says before the strike started, the Pentagon's budget was 839 billion for fiscal 2026. I don't know what that tells you guys. To me, it just tells me that that's a big budget, and we use fake money here, and we just print it. I don't know. I don't know why I brought that up. I want to show you something, which is the ETF and why I don't own this name. Because it's hard to stock pick. Like, how are you going to know which defense manufacturers to buy? I lucked out because 10 years ago I bought some of those names, and I kind of to them. I throughout the years, I did add to them sometimes. I mean, I haven't added to those names in years, I'm sure. But, like Lockheed Martin was the first stock I ever picked, I think, for my Rigatoni Capital portfolio. I think it was the first stock I owned in the portfolio. Long story short, look at this. I mean, I don't know what the expense ratio is because I'm not on that page right now, but I want to just show you the holdings and why it's not really a defense manufacturing ETF as much as I would want it to be. Now, obviously, GE and Boeing have exposure to defense. We know that they're defense manufacturers, but they aren't but they're obviously diversified, right? So they make money in other ways, like Boeing sells commercial airplanes and they manufacture commercial airplanes. So, and Boeing has so many issues, and it was a stock I never really liked. I thought there was too much headline risk there. So, I rather prefer that someone would pick these names. I just realized I have TransDigm too. So that's another name, a defense manufacturer I have technically. So anyway, and Axon, what a great company, although it's crazy expensive and I wouldn't recommend buying it until it really sells off. But look at this ETF, look at the expense ratio. I guess it's going to do well. It's doing well. So, maybe I'm being a little tough on the ITA, US Aerospace and Defense ETF, but I like to stock pick these. just, I don't stock pick all ETFs. I own the SMH, I own XLF, I own ETFs. I just never liked this ETF. And I think it's because it has too much of a big exposure to Boeing. And that's not to me, they're not as much defense manufacturers. I want RTX and I want Lockheed Martin and I want L3 Harris was a position of mine over the years. I like TransDigm, which isn't just defense, of course. They have exposure to defense. General Dynamics is a name that I like, but I just never had the opportunity to buy it. I chose Northrop instead, for example. So just wanted to explain to you the ITA versus stock picking, defense manufacturers. And then, of course, my last point of the podcast is defense manufacturers. On Monday morning, are you a trader or are you an investor? If you're a trader, yeah, I guess you could buy some of these names. I have no idea how to trade. I don't focus on trading. But if you're a long-term investor and you're thinking to yourself, darn, I should have some exposure to Lockheed Martin, why wouldn't I? It seems like it's a good stock to own in general, regardless of the war machine that never ends. And they pay nice dividends, although, there's headline risk right now with Trump saying that they can't buy back shares and pay out dividends or something. But, the point is that you don't buy now. It's too late. You don't buy a stock when it's hitting all-time highs, in my opinion, as a long-term buy and hold investor. I mean, you can sometimes, like if you already have a position in it and you want more exposure to it, I guess you could buy at all-time highs. I'm not going to lie to you, I've probably done that before, but I don't like the idea of buying these on after the event has occurred. Look at me. I'm telling you that you shouldn't do that. And I bought Palantir the day after the US captured Maduro. So don't listen to me. I'm just saying I'm not going to buy these names here. I have exposure there already. Why would I buy Lockheed Martin up here? You know? So, you know, XLE is another very small position. I just started after Venezuela. I feel like something like XLE is never going to be a large position in my portfolio. At this point, it's just too small right now. I don't have the energy to continue to add to this position, and I don't like buying things at all-time highs. So, but as you can see, this is the XLE. It just broke out for the first time in, January, February. So it's hitting all-time highs. The XLE I mean, I can't believe it. Apparently has been around in some form since 1999, and it's just breaking out to all-time highs. The reason it's crazy is because the XLE hasn't done anything. In 2008, before the great financial crisis, it was at $45 per share, according to TradingView. And today it's $55 a share. So you wouldn't have made any money other than your dividends. And we know XLE pays a nice dividend, probably. You know, being in Exxon, Chevron, probably a better. Why can't I find Chevron? Chevron, let's look at their all-time chart. Chevron, you would have made money if you bought in Chevron and Exxon. Let's see. Same thing. You would have done well. Those are good long-term buy and holds. So maybe stock picking those two would have been the play rather than just owning the XLE. Unless TradingView's giving me a wrong chart here. It's making an error. But, it would have been better to buy and hold Exxon, Chevron rather than buy the XLE. So, I'm not buying anything on Monday that I know of. I'm not sure why anyone would chase, you know, names that will a quick bump from this US strike on Iran. So that's not how we invest here at Rigatoni Capital. Anyway, have a great weekend. I will put this out at some point on Saturday. And, I'm new to this. I'm not good at this. This is extremely hard to talk to somebody face to face. I mean, over the computer like this. It's very awkward. So just ignore me, ignore the setup I have here. I'm just trying to give you my thoughts on the markets. And, I thought this was a good chance to get out there and talk about defense manufacturers based on the big bad news from this morning. All right. Thanks so much.